Hello everybody, my name is Thor Young. I'm a moderator of Bear Bull Traders, and today I'm going to be talking about how to use Camarilla points to help influence your bias for your trades. Having a bias is a delicate matter when it comes to trading. You want to eliminate your emotional bias in a trade, but it's quite often beneficial to have a bias on which direction you want the trade to go. Now, I often try not to completely constrain myself into that bias because I don't want to miss out on opportunities because I'm just focused certain ways. However, you have to stay on the side of probabilities. And if you have a stock that's, moved particularly in any one given direction, having a bias in that may be of a benefit. So when I trade, I use Camarilla pivot points, and when I use those Camarilla points, and I'm going to be doing a webinar on these in Bear Bull Traders' webinar in a few weeks around the strategies that are involved in these. When I use these Camarilla points, I allow them to kind of give me some information about how exactly far or extended this stock is. So in the next few minutes, I'm just going to go through the basics of this and then also show you a trade that I took, as you can see here on this 15-minute chart on NIO. So before I get going in on that video, if you have a moment, please subscribe to the channel and ring the bell. That way you'll get notified when our pre-market shows go live and when our new videos come out. And then at the end, if you happen to like the video and you're so inclined, please throw me a like. So moving on to NIO. As you can see here with NIO, let me go ahead and go to my 1-minute chart. You could already tell that in the pre-market, NIO had gapped up significantly. Right? I mean, look at this thing. We had already made this massive jump, and you see here R4, that's my Camarilla pivot point. Now, I've shown how to configure these in other ones, but one of the main things I use these points are for references or locations for where I expect certain price action to occur. And seeing the pre-market move away from the daily levels so quickly on really what was not a ton of volume. I mean, it was good volume, but if you look down here at the bottom, you'll see the comparison of the volume to once the market opened, right? It was good volume, but it didn't look like the kind of volume I would expect to be associated with the entire stock's price moving in value and the larger time frame participants being on board with that move. So as I see NIO starting to go higher and higher and higher, let me get in here, and you can see I'm so far extended from R4 that I'm really kind of starting to look for shorts now. And with that in mind, basically what I will do is I'll go to my level 2 and I start to look for where I see a lot of sellers congregating. In this instance, I could see a lot of sellers around 42, 42.05, and then again at 42.15. And they were there quite a bit. So as we came up into 42, you can see we got stuffed here on this little upside down candle. I was reading that a little bit like a shooting star, but I wanted to make a new low. If this had made a new low below 41.93, I probably would have went short here with the loss of my candle. But it never quite made that low, and it squeezed back up. But when it squeezed, it came in with significantly less volume than the prior candle, which is quite interesting. So after that, it pushed up, and when it got up here, I saw a lot of selling come in. You could see it coming across the tape, and then I went ahead and went short here. I got one partial, and then I got squeezed out as it went for those sellers at 42.15. I was a little bit early getting in here on this move in here. I saw those sellers there. I should have been a little more patient and waited for them. That move to them was so fast in pre-market. I actually took a little slippage here and basically neutralized this first trade. But after it bounced and it held the low volume, I knew exactly what had been happened. I had just squeezed right into those short sellers, so I went ahead and re-shorted right off of it, gave it the loss of the candle, and then I got the really nice move down. And that move carried me all the way into the open. You can see it came all the way down to here, and then we got a squeeze up. I tried a little clever add off of the average here, but I got out on that. At this point, I was already up pretty good after the pre-market run. I was already well over my daily goal, so I thought, why not give it one more go? I really felt strongly about NIO being a short today after being so oversold and seeing all of this selling in pre-market. So I went ahead and re-shorted and then got just a beautiful move down for the day. I did a couple of ads here on pullbacks to the trending averages. Didn't quite make the opening price here, so VWAP and 20 EMA, nice add. Here we broke the 20 EMA but couldn't make it back to VWAP, so added into that on the failure there. And we got a nice move down all the way down to the prior daily level, and then I stopped out here when we got above the 20 moving average because that was my last out. So again, what I'm talking about, all of this pre-market action here just to have the price come all the way back down. Point this out for a couple of reasons. One, pay attention to how far you are in your stock's ATR. If your stock has already traded the entire distance it normally moves on any given day, probably not going to just keep on running. It may. There are those days when it happens, but the smart money is probably going to be against that continuation, especially if you don't get quite as much volume as you would expect. In this instance, although we moved quite well on pre-market, I would have expected a lot more volume out of NIO there than, we certainly had, quite a few shares, but not quite what I would expect for that catalyst. So we ran up there and failed off of it. After that, it was just looking for the opening price and a couple of creative ads to get in there. So really extended away from R4, start thinking shorts because R4 is what we use for daily breakouts. And once you're that far away, you got to start thinking it's time for some profit taking, and then just look for those sellers on the level too and use them and their volume as a signal of when they're starting to get out. And that's when you can go short and buck that trend. If you're into charts, go ahead and look at Chewy from yesterday. Chewy from yesterday on a catalyst like NIO today did the exact same thing. Had a really aggressive buy up in the pre-market and then spent all day selling off. Final point I want to make, for all of those who have trouble FOMOing trades and being afraid that they're going to miss the move, so they buy in and then they take lots of stops, I just want to throw out Exhibit NIO here. For not only would you not be worried about this getting away from you in the pre-market, actually it getting away from you a little bit is kind of that signal that it might be time to go ahead and short that thing for an all-day fade. So I hope this was a good video. I hope the recap helps you all a little bit. Again, if you can, throw me a like, and otherwise, if you're a BBT member, feel free to get ready for that class I'm going to come up. I'm going to really break down these strategies. I have a lot of strategies using R4, R3, and the relevant, the opposite S numbers, and lots of cool stuff that we're going to be going through there. So I hope everyone has a great day, and as always, keep it green. Thanks.